Hi, guys, and welcome back to another episode of Crypto Scoop FM. I know a lot of you are very excited about participating in the upcoming bull run, but there is a reality that we should not miss. And I have been a victim of this too, which is how do we play this market? What's the psychological makeup? What is it that we know about the market? What is it that we don't know about the market? What are the rules around which we should operate ourselves? Is there a system that we can follow to make consistent successful wins over a certain period of time? Are we really thinking in probabilities about the market? So in today's video, I actually want to give you a mental makeup, a mental action plan to think about the markets in a way that will completely change how you trade this cycle. The reason I say this is because in my own past experience, I have had moments when I FOMO'd into things, listen to other people, other crypto YouTubers, and made my decisions. And what happened as a result was I was completely devoid of any system that would allow me to consistently book my profits and de-risk myself. And I ended up round tripping a lot of my gains that I made in the 2024 cycle. So in this video, I'm going to walk you through my strategy, my exact strategy that I am myself following. And then at the end of this video, I'm going to reveal 5 coins that I think are extremely ready for a huge breakout, as in when we pass through September, because I feel like September is going to be a downtrend, and we move into October and November, which is basically when we're going to see the at least from a probabilistic perspective, if the last 4 year cycles are any clue, then we're going to get massive gains. All right, guys, with that, let's dive in. If you're new here or for the first time, I'm Rohit. I've been working in crypto for the last 4.5 years across multiple firms like Polygon Labs, Socket Protocol, and Long Hash Ventures. During this time, I've had the privilege of having a front row seat, observing all of the meta that has developed in the space. And so today, what I'm going to do is take you through my crypto rulebook. As always, nothing in this video should be construed as financial advice, legal advice, or life advice. I am just a guy sitting in a room making YouTube videos. So take everything that I say with a pinch of salt. And with that, let's dive in. So I prepared a small presentation for you guys, which I think you will enjoy quite a bit. I got some feedback that my videos are long. Are they really long, guys? Are they really long? I don't know. Tell me in the comments. Just tell me, right? If they're too long for you, I'll try to break them down into like 10 or 15-minute videos. But I'm usually in a lot of in this flow state, and I like to just go on and pretty much hope that you will stick around to listen to the entire alpha. Anywho, so where I want to start is basically at this point where there are certain things about the market that we do know, right? Especially, and when I talk about the market, I'm talking specifically about what's happening right now in 2025, right? So what is it that we already know, which is true? We know that America is regulating crypto. We know that Genius Bill was signed into act by President Trump on July 18th, 2025. We also know that digital asset treasury companies are the order of the day. You have DATs for ETH, Sol, Hive, BNB, Tau, Sui, Ton, and even more coming, either live or coming soon. You have record ETF net flows, and you have the Security and Exchange Commission announcing its Project Crypto to further legitimize and make crypto a big part of the US TradFi ecosystem. So these are the realities of the market that we know, right? Now, there are certain elements of the market that are unknown to us, right? We don't know which part of the cycle we are at. Yes, we're looking at the 4 year cycle of 2021, of 2017, and 2013 and trying to predict where we are. But in reality, we just don't know if those past patterns would play out. Yes, there are times when history does repeat itself, but that's at the end of the day history. Each point in the market in the present moment is a unique point. And so you need to understand that this is the fundamental truth. No matter how much technical analysis you do, no matter how many different indicators you try to look at, they are nothing but trying to give you a probabilistic edge in the market. And I'll talk about that in a moment. What is unknown to us? Is this the top, or when will we have a top? Right? Nobody can say. It could be in 2026. Some people are even predicting that this cycle could go as long as 2027, because we're going to see not just one but multiple rate cuts coming in, and a lot of liquidity will essentially lead to all risk on assets, including and especially digital assets, go up by notches. Right? Will there be a rate cut? All we can do is watch that CBOE prediction map and see. And we every day we see that. Every day we see crypto YouTubers opening that and sharing it with us, and that percentage keeps changing on an hourly basis. It was 97% just 3 days back. Today it's 84%. Tomorrow it'll be 85. So until Powell gets on the stage on September 17th in the Fed meeting and really announces a rate cut, it does not matter if any so-called crypto YouTuber with 1 million, 2 million, 5 million followers shout on it on their shout on top of their voices claiming it's going to be a rate cut, as if they have some kind of a conduit with Jerome Powell. Nobody knows, right? So this is an unknown element to us. When will the US government create the strategic Bitcoin reserve? I mean, we have seen Trump go dilly dallying over this. Someday he says, yes, Bitcoin is extremely important. It's a critical infrastructure for America, and America has to take a lead on it. Then you have Treasury Secretary Bessent coming on CNBC or any other financial platform and saying we have no plans of buying Bitcoin. So who do you trust? What do you believe? Until it happens, we really don't know what's going to happen. Will Ethereum flip Bitcoin? Similar question. Some people say yes, because there's so much momentum. Some people say no way. So until this happens, there is no way that we can predict this, right? Or when will retail come in? When will they start hogging in? We're looking at Google Trends and we're saying, okay, in the past, Google Trends was telling me there's so much interest, and there they are. But what's the indicator? Because if they are here, the prices should be much higher. They should be bidding our bags, but they are not. So nobody can tell you when retail is coming in, when Ethereum is going to flip Bitcoin, if Bitcoin will become America's strategic Bitcoin reserve, or if America will announce one. We don't know when the top is going to be. We don't know if there is going to be a rate cut. We don't know which part of the cycle we're at. The reason I say all of this is because most of us are trying to predict the market, and we think we are right given whatever edge we look at. And the problem is the market doesn't care about you and me, because the market at any given point in time is made up of so many different buyers and sellers, and each buyer and seller on their individual level is determining what's going to happen in the now moment. This is a very critical indicator, because once you realize this, once you realize that there is no way that I can predict the market, you will also realize that there is no need for me to predict the market. There is no need for me to know what's going to happen next to make money in the markets. And I'll give examples of why I see this. So this brings me to certain ground rules, right? First, there are things that we know as absolute truths in the market, which I covered in slide 1. There are things in the market that are completely unknown to us, which is again an absolute truth. There is no perspective to this. And so based on this, I've made some ground rules, and I'll explain each one of them as I go through them. The first one is we don't need to predict the future to make money in the markets. The reason I say this is because if you really zoom out, and the best way to understand the markets is really to think about casinos, right? If you think about any casino in Las Vegas today, right? You have blackjack, you have poker, you have the slot machine, a lot of different like gambling games are going on there. The house knows though that 4% of the time, probabilistically, they will win, right? Against the gamblers. So all they need to do is not to know how the next hand in poker will play out, because they could lose the next hand and the next hand. It's like a coin toss, right? You could keep tossing the coin, call heads or tails, and you could be right 5 times in a row. But can you say, looking at that 5 observations, that 6 times is going to be head as well? No, you can't. But if I do 100 coin tosses, there is a 50% probability in each instance that it could be a head or a tail. So, by looking at your past observations, you can come up with an observational probabilistic scale of how many hands do I have to play to ensure that I win. And that's why I say you don't need to predict the future. You just need to make yourself available to the market's opportunity flow in the now moment and then trust that your edge will work, because that's all you can do. You can look at the charts. You can try and see what patterns exist, and you can figure out, okay, this is basically an edge that I've developed, which worked for me when I did X number of trades. It might work for me again. And how much? The only thing that is in your control is how much money am I willing to put at risk on the table to figure out or to see if the trade really worked in my favor or not, and what are the probabilities of it happening. Which brings me to the next ground rule. You need to believe that you can consistently win in the market. I've thought about this a lot, and the thing is, because we have so many belief systems, many of them are known, they're at the surface, but a vast majority of our belief systems, our attitudes and behaviors towards how we react to external indicators, right, which we are interacting with through our five senses on a daily basis, how we are responding to them. We are responding to them based on what my whims and fancies are, and why am I responding to it in a certain way? It totally depends on my belief system. So the very same information, you could be exposed to it, and I could be exposed to it, and both our behaviors could be very different. Once you know that, you will recognize that if you're leaving money on the table, or if you're holding on to a trade longer than you should when the market is clearly telling you that it's not working out, it's because somehow deeper in your belief systems you're not very clear on what you want with this trade, or there is a conflicting view which is hurting you, right? So it's extremely important that you deal with the market with the most objective state of mind that you can, because only then, combined with the belief that you can consistently win, will you start thinking about the market and probabilities. And so the numbers will not mean anything to you other than blips, and all you need to do is play long enough to win. The next thing I want to say is we need an edge that we can trust. What I mean by this is, and it could be any indicator, right? It could be just trend based investing. It could be looking at the trend based fib. It could be an MACD indicator. It could be RSI, or a combination of them in different time scales. Whatever it is, which you either buy or you build, you test it and you trust it, right? And then all you need to do is believe in probabilities. If you believe that markets operate in probabilities, and that your percentage of wins is also a function of these probabilities playing out, because let's be frank, you could do the best technical analysis and you can take a trade, but you can lose. Why? Because on the other side of the market, in reality, who the traders are, what their behavior could be with respect to your trade, is something that you cannot know. And if you cannot know that, you can't play against it. That's not a factor that you should take into account. The factor that you can take into account is the fact that market does operate in probabilities, and there is a certain probability scale to each time I'm entering a trade. But do I have a system to trust? And I'm going to reveal my exact system of what I'm looking at. Maybe it will work for you, maybe not, but we'll see, right? Next is that we need to believe that trading is a game of probabilities, and we need to play those out. I've already spoken about this, but to be very clear about this, when we zoom out and we look at the markets, right? Each time the market is giving us an opportunity. Each moment it is giving us an opportunity. But to tap into that opportunity flow of the market, we have to zoom out and we have to trust our edge, and we need to know that for a certain number of odds it will not work into our favor, and for certain odds it will. But can I trust those odds? If you can trust those odds, which means you believe that market does operate in probabilities, you will do much better than average trader. You will have consistent wins in the market. Now the last thing is we need risk management, right? So whatever trade we take, whether it's spot or perp, and the best risk management is always to taking money off the table when the market makes it available. The biggest losses or the biggest pain happens when we route trip. The second biggest pain happens when we sell too early. The third biggest pain happens when we are seeing that our edge is showing us an opportunity, but we're not jumping in. And all of these things are happening because you're not doing proper risk management, right? Either you leave too much money on the table or you leave too little. In each case, you feel pained. And when you feel pained, you are no longer objective about the markets. And it's important that you are objective about the market. Okay, guys. So these are the ground rules. And now I'm going to show you my rule book. The rule book is very, very simple. It's very, very, what should I say? It's objective and it's common sense, guys. It's nothing that's just come out of, it's nothing out of the blue. Each one of you already know it, and that's the surprising bit. But the challenge is to build a system of consistently, a self-disciplined framework that you can trust that the system will deliver for you, right? So what is the rule book? Let's jump on the rule book, guys. And by the way, guys, if you are enjoying this video, if you're liking this video so far, don't forget to smash that like button because it gives me more distribution. The more distribution I get, the more content I can create for you because it just helps me, at some point in time, maybe even monetize this channel. Who knows? Anyhow. So I spent some time and kudos to my friend at Depats. He is the guy who came up with this framework. But I think it makes a lot of sense, right? I spent a lot of time, we've been spending a lot of time discussing and debating it. And now I'm going to take you through this 9-step framework, which is a crypto rule book that I have now applied, which I think will help you navigate the market and make a shit ton of money, right? So for the first step is identification, which is where is the alpha coming from? Is the source that you're receiving the alpha from to invest or reject a token, is it trustworthy? Right? And how do you know it is trustworthy? Well, the only way you can know it is trustworthy is by observing how those calls performed, right? Then over a period of time, you will build trust. The reason I say it is there's a lot of influencers and KOLs out there, talking about certain tokens. And let's be very honest, they talk about a token only because they have received an internal confirmation or some kind of an allocation, right? So we need to be very careful who we're trusting. Is he somebody who really cares about us, about the community, or is he just trying to use us as their exit liquidity? So once you build that trust, that is the first framework when you choose a token, right? And I'm talking about alts, guys. I'm not talking about Bitcoin or Ethereum because we already know there's so much information about Bitcoin and Ethereum. So this is a framework for alts. The second step is verification, right? So what's the alpha? How big is the alpha? Have you written down your thesis and its invalidation? And did you check the unlocks? Have you marked it on the chart? Let me take you through each one of these points very quickly. So what's the alpha? Let's talk about Lido and take an example. So let me go to the Lido chart here, right? So this is the Lido chart, guys. I was just observing it, trying to think about, okay, what's really happening. But what do I know about Lido that made me add the token to my watch list for 2025 cycle picks? We know Ethereum is the darling of TradFi right now. We know Tom Lee is trying to raise $20 billion to buy ETH. We know you have Joseph Lubin and SBET doing the same. We know there is a ton of interest because of the Genius bill and stablecoins coming in. We know, and this is especially for Lido, that there is a ETH staking ETF on SEC's desk right now. And if it is approved, I also know, looking at on-chain data, that Lido is the largest validator. So a lot of liquidity will flow into Lido. As a result, their fees will increase. As a result, more fees. Lido is probably also planning a token buyback that will further fuel the token. So now these are the things which tells me that there is alpha, and it's a big alpha, right? And I've explained my thesis. Now, how do I validate or invalidate this thesis? So let's say the staking ETF actually comes out, and then I'm observing the on-chain data, and I realize, man, there is no increase in the staking volumes on Lido. Is the money moving to some other staking provider? Is it happening through centralized alternatives, or is it going to Rocket Pool or some other competitor? That invalidates my thesis. So it's very important to do that. The fourth one is extremely important: token unlocks. Because if there are massive token unlocks, guys, I know, everybody knows, the more token unlocks, the more emissions, the more inflation in a token, the less its value. So you must always, always, always check during the duration that you want to hold the token, what is going to be the supply. Is it predictable? Do you know it exactly? It has to be absolutely very close to zero, or something so small that the market will be able to instantly absorb it, because that's the only way the token will go up, right? So that's verification. Now that you have verified, the third thing is sector performance. Kind of falls in the same line, but does the token fall under a performance sector of crypto or the meta of this cycle? No brainer, guys. The biggest meta of this cycle is ETH, and the sub meta of this cycle is DeFi. Why do I say that? Because every token that I have added in my 2025 cycle picks has started to rally since April of 2025. All of them has consistently started rallying since April of 2025. I can zoom in here and you can see here as well. Let me just go back a little bit, right? So April onwards, look how much it has appreciated, right? So from April, the token did 127%, guys, and this is true for Fluid, this is true for Pendle, this is true for Syrup, this is true for ETHFi. I don't think it's true for Ondo, but this is true for ENA, for Link, for Camino, all of them. No, not for Camino, but for Link as well, right? So I'll come to Camino in a bit. So, anyways, coming back, the token must fall under a performance sector, because we know that unless it falls in the meta, it does not attract attention, and everything in the crypto market is a game of attention. Now, the next question to ask is, what stage is the overall sector in? Is it in accumulation, rising, stagnating, and downtrending? So I can say, because I've looked at all the charts for DeFi, all of them are either in the accumulation or mostly in the rising stage. So there are, what are these four stages? Let me give you an example. When you look at a chart and it is like this, right, like this, that's rising. When it goes like this, that's accumulation. When it goes like this, that's declining or downtrending. And then when it again goes like this, that's stagnation, right? So we must look at, when we're looking at the token, we should figure it out, right? Overall sector, what's the general trend like? Because that tells me, am I getting into a hot space, and how should I time my entries? Now the fourth factor is market status, right? So how is the overall market? Like, how's the macro going on right now? So with BTC, with ETH, with Sol, like the majors, are they going up? Are they going down? Are people selling them? Is there a negative momentum, positive momentum? So we already know, because we've been looking at this market for the last couple of weeks, and we know, we have confirmation that BTC has broken out. ETH has broken out. It's sitting at 4,200, guys. So we know, macro-wise, we are in a good state. What stage is the market right now? Is it in accumulation, in rising, in stagnation, or in downtrending? I know right now, looking at the market, we're in a kind of a rising state, but right now, having this little sideway rally right now, or even having a small correction, for all I know, right? So this is very important. Then what is the rating of the alt index? When I look at the altcoin season index, I know we're still not in an alt season, right? We're still sitting at somewhere in the middle. And that's actually the best point to observe and start building in. Because if it is, in most, if you go look at the altcoin season index, and actually let me open it for you, because that will give you some context. So blockchain center. And we look at the altcoin season index, guys. I think it's right here, the altcoin season index. There you go. Okay, so if you look at this chart, it says we are not in an all season, and we're sitting at 51 right now, right? Let's go back. Let's look at the entire chart from its history, right? Look at this. 90%, like 50 to 60% of the times, right? The altcoin season index rejects below 75 or at 75. So I know when it starts approaching this level, and if I am entering altcoins, I'm an idiot, because I will be nothing but exit liquidity, right? To give you an example, look at this. Let's zoom in a bit, right? So We had a little rally from December to 24, right? So this happened. It went all the way to 90 and it crashed. So if I'm buying at these levels, I'm getting crashed. But most of the time, look at this. In March, it got rejected at 75. In January, almost a little over 75. Then if I go further, this was 22. Again, we went to 75 and we got rejected. If I go further, rejected at 75, barely above 75, rejected at 75, didn't even reach 75 in 2018. So you can already see when I look at this that 75 is already a very, very crucial range. And so if you want to take advantage of the market, then you need to enter at somewhere around these levels, right? This is the best entry points. And we know we're not in an all season yet. So, but once we have that confirmation, looking at the Bitcoin dominance, looking at the total 3 minus USDT against ETH and BTC, and we see those trend reversals happening, we know now is the time to enter, right? Okay. So next is how is the underlying chain performing? Don't forget that 99% of all trades are linked to the underlying L1's performance. So if ETH wasn't doing well, do you guys really think Aave would do well? Do you guys really think Pendle would do well? Syrup would do well. They are doing well because ETH is doing well. I'm not saying there are no exceptions. There is always an exception to every rule. But the fact that 99% of the coins will perform after the underlying chain has performed is testimony to the fact that we'll first see BTC perform, then ETH, then Sol, and then alts on ETH or on Sol, right? So it's very important that we keep an eye on how the underlying network is performing. All right, next is sizing, guys, right? So sizing is basically how much dollar are you willing to commit or risk in order to see if a trade will play out to your predictions, right? So big, right, is this a hype level new launch, or is this a huge new meta, or an old coin experiencing some kind of a macro change? I'll give you an example of this. A hype level launch, guys. Hype is a once a year launch, or I would say in crypto once every 3 year launch, because not many projects have been able to do what hype has been able to do, right? So if it's that kind of of a bullish momentum on a coin, I'm willing to bet big. Is there a huge meta unlock? ETH staking is a huge meta unlock. ETH DATs are a huge meta unlock because now you're building ETH institutional capital. ETH stablecoin narrative with the Genius Act is a huge new meta unlock. So that gives me a huge advantage, and I am willing to bet big. When I say big in size, and 252,000 is just an example, it could be whatever number for you given your portfolio and your wealth. Or is it an old coin which is going through a macro change? Great example, guys, Chainlink. Chainlink today announced that they are now ISO 27001 compliant. They're SOC compliant. They are becoming the new banker coin. They are building the interoperable layer for stable coins, right? So that's the narrative. It's an old coin from 2021, from 2018 actually, back in the day when it did its ICO, but it's now going through these macro changes, right? Next is Medium, right? Is it an alt that performs well in a bull market and is already a big player, right? So a good example here, could be something like, an ETH alt like, Uniswap or Aave, right? It is a decent coin. It's pretty big, and it performs well in a bull market. If you go look at the history, right? So I can actually have a medium-sized bet on this token, even though there is no direct narrative right now going, directly connecting it with the whole ETH stablecoin thing, right? Next is spoil. Are you exploiting something that is random? If you are, a good example is the Kanye coin that was launched today and dumped by a small cabal. The reason it's important that you ask this question is because at this point in time, you need to check your emotional state. Are you doing this because you are into FOMO? Do you have an inside information? How much confidence you have on playing this play? And if you do at whatever scale, um, only bet a very small amount, right? So this is very, very important. And are you sizing as per the stage of the chart? What does that mean? So there are 4 stages, as I said. There is the rising stage, there is the accumulation stage, there is the declining stage, and there is the stagnation stage. So you need to look at the chart and you need to size yourself up based on where you are in the chart. Because most of us, top blast, we don't look at the chart, we don't spend enough time on the chart, we don't want to see the behavior of the market and what is the market offering us in terms of the opportunity flow, because that's where we'll get the opportunities, guys. Next is the holding period, right? For each coin that you pick, what is your holding cycle? Is it multi-cycle or till the end of the bull, and why? And you can always, because you need to know that you can always buy lower in a bear market, right? So if you're making those choices, you have to be very, very careful. Ask yourself these questions. Then is it medium? Like if you're buying in the middle of the bull market, have you defined the coming price activity and when the local or current cycle might end? As I said, with the altcoin season index, if you're going to enter the market when we're at this range, now in 2021, if I zoom the chart out a bit, you will see in 2021 it went to like crazy levels, right? So if you're entering at this stage and this is pretty much the banana zone, and it goes to the banana zone, you will make money, but you have much less duration, and you can't time the market top. Nobody can time the market top. So be very careful when you do that, which is when you're trying to mid the trade in the height of a peak season. It's not going to work well for you. And then in less than a week, is this a swing trade for you? Because each of these will determine how you look at the chart, what is your edge going to be, how you're going to risk manage, all of those things. Now, technical analysis, right? Are you buying at current prices, or can you get at a lower price? Again, going back, what stage is the chart at? What is the chart telling me right now in terms of the market today? Right? Very, very important. Did you get a breakout trade, or is it a continuation buy? Let's take an example from this chart. So, you know, uh, uh, if I zoom here, this is the chain link chart, guys, for the last from 2022. I think that much is enough for us. Let me just zoom in a bit, right? So this is the stage right here from May 22 till October 23, when nothing was happening on chain link. So this was pure accumulation, right? You can see there was like there's so much volume here, but price barely moved anything. It's just accumulated at this range. Let me just let me look at this for you guys. Right, so yes, so this is the range where the accumulation happened. Then we entered the rising phase. What happened at this stage? At this stage, the price broke, right? And it created a new high, and it kept going up. This was the rising stage, right? Then came the correction, right? Then there was a correction. Then it rose again, right? And now it's kind of just wedging past at this stage, right? It came back again, and now it's trying to go up again. So what is it that we're looking at, right? We're trying to figure out, is this a breakout trade or a continuation buy? So in this case, I know that the chart has done multiple breakouts. Like look at this, it broke out this little accumulation that was happening right here. It barely accumulated and it just broke off, right? It's breaking out again. So this is a breakout trade. A continuation trade would have been something like this when you buy at these levels, right? So we've already seen breakouts happen, and I'm entering at this stage. So it's very important that you define this continuation or a breakout and know when you're getting at, because that will define how you will play this market, right? Have you marked your stop loss or trade profits in the take profit levels in the chart? Always, always. Very good practice to do risk management. Now, have the levels been automated? Like, have you set them up and made sure that they will automatically execute at those levels, even when you're not looking at the market? Extremely important, right, guys? And then finally, right, can you get the best price the chart has to offer if you just hold on for some time? We have a habit of top blasting. Like imagine you would have bought this at here, right, in this rally in December, or now even in this rally in August. Look at where it's sitting. It's completely going berserk. So what's next for me? If I buy here, I know. Sorry, if I let me just get this right again. If I buy here, I know the next top is very, very close, and there is going to be resistance at one. At it has rejected twice, right? and then it's going to fall back. And look how much it fell. It fell back all the way to this fib level at 0.0618, and then it came all the way down to 0.05. So market always corrects itself, and it will come down. And can you get better levels? If you can, you should wait. So patience is the name of the game, although I do see there is rising volumes here. Okay, very quickly summarizing, finally the exit strategy, right? Have the stop loss and take profit levels been marked? How soon can the position be de-risked, right? So this is the most important element, because we think we can sell at the top. That's impossible to do. So you must mark your take profit levels and keep exiting like 20 to 25% of your trades. Extremely important. And then always leave a moon back, because then whatever happens in the market, you will be able to observe it and take advantage of it, right? So this was my crypto rule book, guys. I think we're already at 35 minutes. So I'm going to quickly cover a couple of tokens that I'm looking at. I'm not buying any of them right now. Let me be very, very clear. But what is the meta that I'm looking at? I'm looking at the buyback meta. I'm looking at the DeFi meta, I'm looking at Ethereum, and I'm looking at Solana, because there is an staking ETF application for both Ethereum and Solana. And when that happens, there are a bunch of different projects which will take advantage of this meta. Right, so I have Lido, which is the number one category leader in liquid staking. I have Fluid, which is doing incredible buybacks, and the chart looks fantastic as hell to me right now. I have Pendle, right, which is again another DeFi meta on Ethereum. Again, a very strong project. Then I'm looking at Syrup. If I have to choose between Syrup and Ondo, I think Syrup is a much better risk reward play. I'm looking at ETH.fi. Again, it's a combination of the liquid staking meta, plus also they have their own crypto card, which is great. I'm looking at ENA, right? But now ENA over Syrup, maybe I'll go with that. And I am also looking at Link right now, and I'm waiting for a correction to happen on this chart. There are others here as well. There's Camino, there's Jupe, there's Jito, there's Rain, there's Orca. Like there's a bunch of different projects on Solana that I'm looking at. So what I'm going to do, I am going to mark my levels in the chart. Like I've marked some levels in the chart where I want to enter or exit. Like let me show you Sonic, for instance, right? Look at this. Look at this chart. I added this chart because there is a strong DeFi meta happening right now, and this is one of the L1s, which is kind of bottomed out. And if I look at the volumes, right, they're now beginning to kind of show this trend upwards, right? So people are beginning to buy at these levels. But what I'm going to do is I'm not going to buy here. I will never buy in accumulation. Always buy in a breakout. So I'm going to wait for a breakout at this level, and I'm going to wait for a confirmation like with a higher volume breakout. And when I see that, I'm going to start entering a position, either spot or perp as well, with a low leverage, right? And then I'm going to play this chart out, right? At different levels, I'm going to exit and keep booking my profits. So that's how you look at the charts. That's how you think about the markets. It's extremely important, guys, that you do this kind of exercise, because most of us lose money because we're extremely unprofessional and have no system to play around our bets. That was the video, guys, today. I hope you enjoyed it, and I'll see you again on Friday with a new video. Until then, sayonara.